Thank you, Basil. For decades, moving money across borders meant relying on a slow chain of correspondent banks. Stablecoins in crypto are now quietly rewriting that system. Joining me is Claire Barratt, Managing Director UAE at BCB Group. Claire, welcome to Wall Street to MENA.
Thank you for having me.
First, correspondent banking has run cross-border payments for decades. Help us understand how that system actually works today.
So correspondent banking is set up by a network of banks to allow payments to move to and from each other globally. I think there's two parts to break down how correspondent banking operates. Firstly, there's the communication system between the banks. So that's a system called SWIFT, which was founded in the 70s by banks to have a standard method of communication to make the instruction to the bank to make the debit or the credit on the account. But fundamentally, how the money moves. I think the best way to think of it is almost a daisy chain of relationships between banks. So if you think globally, there's over 30,000 banks across the world. It's very unlikely all those banks are going to have a direct relationship with each other. So if you have a small regional bank, say in America, that wants to make a payment to a small regional bank, say in Germany, through correspondent banks, they can have relationships with bigger banks in their own countries and make a connection of a daisy chain. So they may bank with a Citibank in New York and the German bank may bank with a Deutsche Bank in Frankfurt. Through that connection, the payment can then be made through a chain, but that takes 4 banks. And so, as you said, this can be the part where delays can happen or where multiple operating hours across different time zones can be challenging. But it has been a way that has, served for a good amount of time.
Yeah, of course. But it is slow, though.
It is slow.
And maybe that's why now we're talking about crypto and we're talking about stablecoins as well. So how are stablecoins in crypto as well actually replacing that system?
So really what stablecoins, the benefit they're bringing to cross-border payments is taking out those middle steps. So there's less of a need for all those correspondent steps. And the benefit that then brings to customers that are using stablecoins as a cross-border payment method is it's cheaper because all of those steps, each bank would take a fee for processing that payment. And as you mentioned, time, speed is of the essence.
Yeah.
And so particularly as we move to a world where customers want instant settlement 24/7, I think stablecoins are really a powerful play to that part.
Yeah, it definitely removed those layers that we're talking about. So you went from tier 1 banks, actually like Commerce Bank, like Wells Fargo, to fintech as Revolut, then to crypto infrastructure. What made you jump on these jumps now?
So it's a great experience. I was 10 years at Wells Fargo Bank, who's a leading US correspondent bank. I learned a lot there. But I think when you work for an organization of 250,000 people, it's very difficult to have a direct impact to the customer. So whilst you may change something in your team, it's a huge organization, a big juggernaut to move. So I was approached to work for Revolut. That was my first dabble in fintech back in 2019. And fintechs at that time was severely disrupting the banking space, particularly in the UK, and bringing innovation to the market, shipping products, really becoming much more transparent around fee structures. And that really was something that was interesting to me. So I've stayed in the fintech space because I think particularly as a leader in this space, you can have a much quicker direct impact on customers and making improvements and bringing innovation to the market.
You felt the impact, and then you dive into the crypto space as well. So BCB Group now isn't trying to replace bank. You're just trying to replace the settlement.
Yes, so we're not replacing banks. We partner with many banks globally. Yeah. So we're effectively sort of an infrastructure layer. And what BCB brings is institutional grade rails that are compliant, instant, and provide global settlement to our customers. So we don't face retail customers like you and I, we face corporate and institutions. And we have a network of almost 20 tier 1 banks, industry partners, and through that we can bring a one product offering to our customers. So they don't need to do it with all those integrations. So that can be up to 36 currencies the customers can transact with us, and also that interoperability between digital assets and fiat.
Now, places like UAE, like the Southeast of Asia as well, are seeing the strongest stablecoin growth at the moment. What's driving that specifically?
So I think those trade corridors have always existed. It's not new flow, but what's bringing is people are seeing the recognition of the stablecoin benefits that we've spoken about, and therefore leveraging that new technology rail. I think also in the markets, particularly in the UAE, very strong regulatory, they're robust regulatory programs that have been around for a while. Same in Southeast Asia markets like Singapore with the Monetary Authority of Singapore. So these are strong regulatory jurisdictions. So institutions can feel confident in leveraging stablecoin technology, that this is a safe and compliant method for moving funds globally.
Yes. So. Now, you touched upon the relationship between big banks and smaller banks. And let's talk about smaller tier 2 banks. They can now access stablecoin rails without the usual SWIFT fees.
Yes.
Does that actually level the playing field against bigger banks?
A little bit. I think it allows them, removing those layers of complexity and charges that happen around that point. I think it makes it easy. But I think what you have to remember is the payment space is still a highly regulated environment. And the cost to play in this game is high compliance, high regulations. And so it takes some of the infrastructure cost away, yes, but still to be a player, I think, in this space, tier 2 banks still have those costs and regulatory upkeep that they have to maintain.
Definitely. Now, you're leading BCB's, as we said, UAE expansion now as managing director of it. Why was this market a priority over other markets in the region?
So the UAE is, a major global financial hub. So what's important for BCB is we're currently regulated in the UK, France and Switzerland. So particularly we focus on high regulatory jurisdictions where it's tough to get licensing. And with that comes that regulatory importance and clarity that we seek. So we chose the UAE because we very much see that, and particularly around the digital asset space. There's lots of regulators in region, and depending on where you're located, depends on which you pursue. But stablecoins and digital assets are an important part for this region, and it's important for us to be in jurisdictions where there's clear rules of operation. It's tough to get regulated, and then operating here, hopefully we should be successful. And I think where you see that it's a global financial hub, the UAE is attracting other corporates and institutions from all over the world to be present here, and those will be future customers of BCB, hopefully when we're licensed.
Yeah, definitely. We're seeing that at the moment. And let me ask you also about traditional banking or correspondent banking. Let's say if it actually eventually disappears entirely, what replaces that trust that the whole system was built on?
It's a good question, because I think banks have always been seen for decades as that true trusted organization. I hope a world exists where both operate in parallel. I don't think it will entirely disappear. But I think what's happening is the shift is that you're starting to see other players like infrastructure layers like BCB and other stablecoin issues. Other trusted players are coming to the market. And where those are in strong regulated jurisdictions, that can give customers clarity on it's a safe place to operate.
Yeah, definitely. Thank you so much for being here with us, Claire Barratt.
Thank you for having me.